Hello, everyone, and welcome back to Classic Comics. This is a shocker. The story broke last night. Apparently, Bob Iger, the former CEO of Disney, is coming back to replace his replacement, Bob Chapek, who is being fired. Chapek replaced Iger back in early 2020, just as the pandemic was starting. And Chapek was viewed at the time as more of a businessman and more about the dollars and cents and less of an ideologue. And so I think the expectation was that he would maybe sort of start reducing the level of woke content they were putting out, at least publicly. Uh, Chapek really just doubled down on the wokeness. He never really made any public move to get away from it. He supported Disney's criticism of the anti-grooming laws in Florida, for example. But apparently that wasn't enough, and the Disney board of directors has fired him and brought back Bob Iger. Iger was the head of Disney for about 15 years and bought up multiple studios and IPs during his time here, including Pixar, Marvel, Lucasfilm, and 20th Century Fox. And in the process of buying up all these properties, Disney accrued a lot of debt. But apparently, the board of directors doesn't blame Iger for these financial losses. But a lot of the problems they're having financially date back to the time that Iger was previously running the company. So, them bringing him back to supposedly fix these problems seems kind of odd to me. Again, it sort of points to the board of directors not really blaming Iger for any of the problems they're having now, even though a lot of it really began with him. I think this means, at least in the short term, that Disney's going to double down again on woke content. But let's just go ahead and get into this article. In a stunning reversal, the Walt Disney Company announced Sunday night that Chief Executive Bob Chapek was out and will be replaced by his predecessor, Robert Iger. We thank Chapek for his service to Disney over his long career, including navigating the company through the unprecedented challenges of the pandemic, board chair Susan Arnold said in a statement. The board has concluded that as Disney embarks on an increasingly complex period of industry transformation, Bob Iger is uniquely situated to lead the company through this pivotal period. Iger served as Disney's CEO from 2005 to 2020 and served as chief executive chairman and chairman of the board through 2021. So really, he's only been gone about a year. Over his 15-year tenure as CEO, Disney rebuilt itself as a media powerhouse with the acquisitions of Pixar, Marvel, Lucasfilm, and its Star Wars properties, and 21st Century Fox. Mr. Iger has the deep respect of Disney's senior leadership team, most of whom he worked closely with until his departure as executive chairman 11 months ago, and he is greatly admired by Disney employees worldwide, all of which will allow for a seamless transition of leadership, Arnold said in a statement. Disney shares jumped 8% in pre-market trade to $99.10. Disney shares have fallen about 11% since June and are down 41% year to date compared to the 5% decline this year by the Dow Jones Industrial Average, of which it is a component. Yeah, so a lot of this really, as I've said before, it goes back to the stock price. So if we look here, so currently trading at $98.61 a share. And so when you look back to around the time Chapek took over, so here, if we see back on March 20 of 2020, this is about the time Chapek took over. But I don't think this drop is because of him. I guess this steep drop you see here from like about 140 down to about $86 a share. I'm imagining that's because of the pandemic and the economic shutdown. Because they had to shut down their parks and theaters were shut down, so they had no revenue coming in, at least not from the parks and the stores. And I'm imagining that's what this sudden steep drop is here, but this is right around the time that Chapek took over. And during his time, it slowly built itself back up and again got to an all-time high here of 197 and 16 cents on March 12th, 2021. But since then, it's been a steady decline over about the last, little over a year and a half, hitting down to $91.80 a couple of days ago. And as the article noted, it's had a little bit of a bump here and jumped back up a little bit. But this plummeting stock price, more than anything, is probably what did Chapek in. And again, I don't know how much of that was under his control, but whatever. Anyway, to continue, Disney made clear that Iger's return will be temporary, 2 years, with a mandate from the board to set a new strategic direction and develop a successor. Wow, Wedbush analyst Dave Ives said in a tweet Sunday night, Iger had golden touch at Disney, he said, adding that his return is a, quote, major strategic move with ramification across the media and streaming industry looking ahead. Iger announced he was stepping down as CEO in February of 2020, with Disney saying at the time he would continue to direct the company's creative endeavors. Earlier this month, Disney's stock suffered its worst day since 2001, following what one analyst termed a massive earnings downgrade after the company in its fourth quarter earnings report forecast significantly softer than expected single-digit growth in the coming fiscal year, far below analysts' consensus view of 25% growth. So that's probably what did Chapek in right there. That was all despite Disney's best year for revenue growth in more than 25 years. Disney theme parks grew steadily in the third year of the COVID-19 pandemic, but its largest business segment, media and entertainment distribution, suffered a sharp drop in sales. And while the Disney Plus streaming service is rapidly growing, it's still a money loser. The service will add a cheaper advertising-supported tier in December in a bid to increase revenue. And so, I mean, that's another thing. This Disney Plus has so far not been financially profitable for them. And again, that's Disney Plus is Iger's baby. He's the one who got that thing up and running. Earlier this month, the Wall Street Journal reported Disney's company-wide plans to cut costs, including a near ban on business travel, a hiring freeze, and likely layoffs. We are going to have to make tough and uncomfortable decisions, Chapek reportedly said in an internal memo. Earlier this year, Chapek was widely criticized for Disney's response to Florida's new Don't Say Gay law, or anti-grooming law. After at first saying Disney would stay out of the political fight, he finally expressed his concerns to Florida Governor Ron DeSantis and pledged millions to LGBTQ+ causes and paused the company's political donations in Florida. That drew harsh backlash from conservatives, while many Disney employees participated in walkouts to protest what they said was Chapek's slow and lackluster response. Chapek apologized to employees, saying, "I let you down." I mean, it was like a couple dozen people. It was like 50 people or something. This past June, Disney extended Chapek's contract for another 3 years, with Arnold calling Chapek, quote, the right leader at the right time, and saying he had the board's full confidence. Well, the worm turns quickly, doesn't it? While Iger was long seen as a champion of creatives, Chapek chafed many at Disney with his decisions, including one to stream new movies on Disney Plus the same day they hit theaters, which drew a lawsuit from actress Scarlett Johansson, who claimed the decision cheated her out of millions of dollars in earnings. In March, CNBC reported that Iger and Chapek, his handpicked successor, had a falling out and rarely spoke anymore, and that there was significant internal tension caused by Chapek making key decisions about Disney's future without Iger's input. It was extremely awkward, one source told CNBC. Earlier this year, in a podcast with Kara Swisher, Iger dismissed ridiculous rumors that he might return to lead Disney, saying, "You can't go home again." But in a statement Sunday night, Iger said he was thrilled to return. Quote, "I am extremely optimistic for the future of this great company and thrilled to be asked by the board of directors to return as its CEO. Disney and its incomparable brands and franchises hold a special place in the hearts of so many people around the globe, most especially in the hearts of our employees, whose dedication to this company and its mission is an inspiration. I am deeply honored to be asked to again lead this remarkable team with a clear mission focused on creative excellence to inspire generations through unrivaled, bold storytelling." Yeah, so, I mean, basically, Iger's been brought in to right the ship financially, but Iger, his strategy basically was buying up properties, accruing a lot of debt, getting Disney Plus up and running and acquiring a lot of debt, and then really pushing the woke stuff. So it's hard to see how he's going to be able to fix this, because so much of this was of his own doing. But apparently the Disney board doesn't see it that way, and they see him as the guy going forward. I am dubious about that myself. Let me know what you think in the comments. Is Disney making a good move bringing Iger back, or should they have stuck with Chapek? Do you think that Disney's content is going to change in the future, or are they just going to double down on the wokeness the way they have? And while you're at it, please do like, share, and subscribe to the channel and hit the bell for notifications. And I will see you all next time. Thanks for watching.